Bitcoin market insights, analyzing key factors driving price action and what to expect next week. Analyzing Bitcoin's price action and future outlook November 1, 2024. Current market structure. As of November 1, 2024, Bitcoin's price action has been significantly influenced by several macroeconomic events, political anticipation, regulatory developments, and ongoing institutional investment trends. With a pivotal week ahead, understanding the interplay of these factors is crucial for navigating the current financial landscape. 1. Election anticipation and market dynamics. The impending U.S. presidential election has been a major driver of Bitcoin's price movement. With election day just days away, investor sentiment has become highly reactive to developments in the political landscape. The political stakes are high for the crypto market, given both major candidates' apparent interest in promoting cryptocurrencies. Key details. Donald Trump, the Republican candidate and former president, has publicly committed to making the United States a crypto capital. His administration's policies would likely favor deregulation and encourage crypto adoption, potentially giving Bitcoin and other digital assets a substantial boost. Kamala Harris, the Democratic candidate and sitting vice president, has also expressed a positive outlook on digital currencies. Although her stance is more measured than Trump's, it leans towards implementing regulations that enable growth while ensuring stability and investor protection. Correlation with price action. Bitcoin's price surged close to its all-time high as anticipation around these crypto-friendly candidates gained momentum. The market views this bipartisan interest as a green light for institutional investors and crypto advocates, fueling optimism for the next regulatory cycle. However, the flip side is that any uncertainty or a shift in sentiment regarding the election outcome could rapidly introduce volatility. 2. Institutional investment and ETF inflows. Bitcoin ETFs have been another major catalyst in the market, bringing unprecedented levels of institutional participation. The launch of various ETFs has made it easier for traditional investors to access Bitcoin, which has translated into significant inflows. Institutional interest. BlackRock's iShares Bitcoin ETF has experienced robust investment inflows since its introduction. As the world's largest asset manager, BlackRock's involvement in the crypto space signifies a turning point in institutional adoption, further legitimizing Bitcoin as a mainstream investment vehicle. Other ETFs, such as those managed by Fidelity and Invesco, have also seen consistent interest, underscoring a trend where traditional finance is increasingly embracing digital assets. Impact on Bitcoin. The continuous inflow of capital into these ETFs has buoyed Bitcoin's price, reinforcing the growing demand for digital assets among institutional investors. This inflow has a stabilizing effect, providing a solid price floor and mitigating extreme downward volatility. However, the extent of this support will be tested if political or macroeconomic events undermine market confidence. 3. Macroeconomic data and its ripple effects. This week, mixed macroeconomic data added another layer of complexity to the financial landscape. U.S. GDP growth. The latest GDP figures showed growth falling short of expectations, which generally dampens investor sentiment. Economic underperformance could prompt the Federal Reserve to adopt a more dovish stance, potentially keeping interest rates lower for longer. A dovish Fed is typically bullish for risk assets like Bitcoin, as it creates a more favorable liquidity environment. ADP employment report. In contrast, the strong ADP job growth numbers indicated a resilient labor market, which could complicate the Federal Reserve's decision-making. A robust jobs market suggests that the economy is not cooling as quickly as anticipated, possibly leading to continued monetary tightening. Correlation with Bitcoin. Bitcoin has historically performed well in environments where central banks maintain accommodative monetary policies. Thus, weaker economic data and dovish signals from the Fed would likely support Bitcoin. However, if the Fed continues to emphasize rate hikes to combat inflation, the strength of the dollar could exert downward pressure on Bitcoin, given their negative correlation. 4. Regulatory developments and sentiment. Regulatory news remains a constant source of volatility for the crypto market. While no major policies were implemented this week, the market remains sensitive to discussions around Bitcoin taxation and potential bans. European Central Bank, ECB, and U.S. Federal Reserve officials have discussed the need for comprehensive regulation, especially concerning stablecoins and decentralized finance (DeFi). Although Bitcoin is not directly targeted, these conversations raise concerns about future restrictions that could impact market dynamics. Global coordination. G20 meetings have emphasized the need for coordinated crypto regulation, and any move towards global standards could significantly influence investor sentiment. Potential scenarios. Positive regulatory news. Clear, supportive regulatory frameworks could unlock more institutional investment and drive Bitcoin higher. For example, if regulators establish guidelines that foster innovation while ensuring security, market confidence would rise. Negative regulatory announcements. On the flip side, any sudden move towards restrictive policies could trigger a sharp sell-off. Investors should be prepared for headline-driven volatility, especially if unexpected regulatory developments occur. 5. Technical analysis and market sentiment. The current technical setup for Bitcoin shows a market in a strong bullish phase, with key indicators suggesting potential for further gains. However, overbought conditions hint at a possible short-term pullback or consolidation. Fear and Greed Index. The Fear and Greed Index, a popular metric for gauging market sentiment, remains in the greed territory. Historically, this suggests that a correction could be imminent if sentiment shifts. However, strong fundamental support from institutional inflows and positive macroeconomic trends could extend the current rally. Technical indicators. Support levels. Bitcoin has significant support at the $66,000 level, provided by the intraday moving average, MA clouds. Additional support lies between $63,980 and $61,669, where key Fibonacci levels and long-term MAs converge. Resistance levels. Near-term resistance is clustered around $72,000, where previous sell signals have emerged. Breaking above these levels would likely trigger further buying interest, potentially driving Bitcoin to new highs. Momentum indicators. Overbought conditions on the stochastic oscillator, NMACD, suggest that Bitcoin may experience a cooling-off period. Nevertheless, if support holds, the next leg up could follow after a healthy consolidation phase. Expectations for the coming week. Given the confluence of election anticipation, macroeconomic data, regulatory sentiment, and institutional investment, next week is shaping up to be crucial for Bitcoin's trajectory. Election outcomes. The U.S. presidential election will be the main focus. If a pro-crypto candidate wins, expect a surge in market optimism. Otherwise, prepare for potential volatility. Economic indicators. Watch for key economic data releases, such as the non-farm payrolls report. Weak numbers could favor Bitcoin, while strong data might pressure it. Regulatory news. Keep an eye on any policy announcements. Even the hint of a regulatory crackdown could have a pronounced impact on Bitcoin's price. Institutional flows. Continued ETF inflows will be critical. If institutional interest remains strong, it will provide a solid foundation for Bitcoin's uptrend. Final thoughts. Bitcoin's price action remains intertwined with external factors, from political outcomes and regulatory news to macroeconomic shifts. While the overall trend remains bullish, caution is warranted given the potential for sudden volatility. Investors should stay informed and be prepared to adapt as new information unfolds, with a focus on key support and resistance levels to manage risk effectively. This comprehensive analysis highlights the interconnected nature of the events shaping Bitcoin's market behavior and what investors should monitor closely in the coming days.